Thank you. Thank you so much for that warm welcome. You know, I'm so glad that all of you here are millennials or who is Gen Z. How many Gen Zs here? Three Gen Zs and millennials? Okay, she don't know what she is. She'll tell her afterwards. Okay? So I'm so glad to be here today because I really do like helping others in the financial space. I'll give you a little story about me. I'm really from Exuma. And so I came here when I was 13. When I say here, Nassau, right? And after graduating from high school, my parent, I was too young. So I was 15 when I graduated. My mom figured I was a teacher. I think she was right. She figured I was a teacher, so she signed me up to go to College of the Bahamas. College of the Bahamas back then, it's UB now for you, to do teaching. I'm like, wait a minute, I know teacher. And so I dig deep within and I said, I'm a banker. And so I applied on the first day at COB. I went into the administrative office and I said, please change my degree. My mommy fill in this application. And so that's what I did. So I became a banker. But I realized during the years while I was a banker that I was a teacher. So I volunteered a lot of time to help, to train. And in my jobs, all of my jobs that I did, I helped to train because I want people to have knowledge. So that's a teacher. So let's get on to first time home owners. Now, as she read, I was a mortgage manager. I was desiring to be a mortgage manager. I started in the banking field as a teller, even though I had my associate degree. That's what they do to you, okay? Even if you have a bachelor's degree, they start you at the beginning. But I was happy that I started at the beginning because I got information and knowledge from the ground up in the organization. And if anybody who knew the organization, it was me. Because I ended in customer service. From teller, I went to customer service, loan officer, mortgage manager, product manager. I knew it all. Not getting heady. I'm just saying I knew the bank like the inside out. And so now my desire was to see people really take ownership of properties. And I'll tell you a recent story. She did say, I have two children. So my son Eric decided that he wanted to, own, right? Okay, I said, very good. So let's look at some options. And he was really with it until it was time to get rid of the money. I said, what's going on here? So because he got, bonuses, and then he got a payout from his grandparent who died. And so he had a number of, some good change. And so when it was time to make the deposit, it was really, really bad. Okay? And we had this argument going back and forth a couple times. And I said, no, you're not getting any money at the moment with your money sitting on the account. Okay? Zero, zero, zilch. Okay? Not even time deposit 1.5% if you have probably $1 million, if it's that much. But so I convinced him to get into ownership. I had to show him the logic, and I'm going to do that for you today. Okay? So I hope you will do that. I'm sorry, at the point here. Okay. Okay. I'm sorry. And so some of the financial institutions that really do lend, and this is their campaign, Commonwealth Bank, Bank of the Bahamas, you know them all. There are loan sharks also, Fidelity, Royal Bank, CIBC. And let me tell you, when I was in that field, the financial field, my rate of mortgage was 5%. Someone came to me, I think it was last week, they said, I'm getting 4.5. I said, you are doing what? 4.5%. I said, you know what you're getting? Staff rate. Take advantage. Because I remember when I was a mortgage manager, it was 8, 9, and 10%. And construction and other loans were even higher. I said, you're getting 4.5%? Let's work this. And so shop around for your rate. Get the best rate. And we're going to get right into this because I really want you. Oh, I'm sorry, I have to go down. Hey. Okay. Okay, good. All right, so what is a mortgage? Now, notice the first word of mortgage is M-O-R-T. Do you know what that means? Debt. Okay, debt. And so being a person who was in the financial industry, not only I like to give you a mortgage, but I also like for you to save. So I didn't like the word mortgage. And so let's say what mortgage is. Mortgage really is a reverse saving. Okay? Every month you have to pay to the bank. Let's say you want to save $1,200. That now goes to the bank, $1,200. So all mortgages, for your quick memory, is a reverse saving. Every month you're making a payment. It's also a secured loan used to purchase or refinance real estate. Now, you could get terms as low as 10 years. When I was in the industry, it was 25. Now it's 30 years. All it is an extended time. But you have to understand, when you extend the time, the more time you extend, the more payment you make, the more money the bank makes. So you have to look at the whole thing, and we're going to get right into that because I know y'all are so excited. Y'all want to know. You're ready to take that first purchase. And so let's get right into it. And so I want to give you some rule of thumb before we get into it. The first rule of thumb is, we call it the 50-30-20 rule. And what is that? 50%, I'm talking about your salary now. 50% of your salary should go to needs, not wants, needs. 30% go for wants, okay? 20% savings or other debt. And we'll get into that also. Now, I'm just going to get you some technical terms. Total debt service ratio, we call TDSR, okay? That is, you should not borrow more than 55%. Now, remember, I'm talking about rule of thumb. And so some of you who are financial, you do your calculation and you say, listen, I don't want to spend more than 55% of my money. So you have 45% coming back to you. Now, some of you like me who pay a tithe, that come off the top, okay? And so you have to make sure that you have enough money to spend. I've seen situation in my industry, because I'm still in the financial industry because real estate now is part of FTRA, Financial Transaction Reporting Act. So I'm still in the financial industry. And so I've seen persons come from their organization. I don't know how it happens, but they have 0, some people 5%, 10%. That's all left on their payslip. Now, payslip tells a story. And so on their payslip, I'm like, what, 10%? And so they come, when I was in the industry, they come for me to consolidate. Okay? Now, consolidation is another story, but for you, we're just going to talk about mortgage, okay? So, calculating your mortgage. But before we calculate your mortgage, let's go down. Let's talk about types of mortgage. Okay, sorry. Types of mortgage. Anybody can tell me a type of mortgage? Okay. Okay, I'll say one. Home. Okay.
I thought mortgage only was for homes. Yeah. Literally.
Okay, so we're going to go back to the description.
I tell you, we don't know nothing.
Okay, so mortgage is for financing real estate. Okay, now there's commercial mortgage, residential mortgages. And so the residential mortgage really is your home, duplex, triplex, condominiums, and the like, okay? The banking industry classified commercial loan as anything more than 3 or triplex. It becomes commercial over 3 units, okay? And so that's the types of mortgage. So let's go back up then. I want to do a little calculation because I have a degree in finance. I love to calculate. You say one figure and I'm picking up my calculator, all right? And so there are online free mortgage calculator. You want to know how much you should spend. Remember I talk about the rule of thumb. So with your rule of thumb, keep in mind you want 45% in your hand, okay? Try not to go over 45% because you squeeze in your budget, okay? And so on the online mortgage calculator, you find you have to input your home value, the loan amount, the payment, the interest rate, the term, the years, and payment will be calculated based on all those above. And you're like, what is she talking about? Okay, so let's go to the mortgage calculator. So I went to the mortgage calculator today, and I input 300,000 at a rate of 4.5% because that's what she told me. She said they were going to give her 4.25 or 4.5. At a rate of 4.5%, 360 or 30 years, start date this month, total interest paid. I see somebody do little, what? Total interest paid $279,767.35 to the loan company. Total payment $579,000. Okay, I know that's good and that's bad. We're going to get into some ways how you could do that too. Okay, so when you're purchasing a property, you also need types of insurance. Who has life insurance in here? Okay, so it means that when you approach the bank, you have to also get life insurance. Then it's homeowner's insurance. What is homeowner's insurance? The homeowner insurance protects your asset, which is in the home itself. Then it's life insurance, which is the protection for you. But that is assigned over to the bank in case you die. In case you die, the monies, the bank is the first beneficiary, and anything remains go to your beneficiary. Okay, so you want to know why you want to get a life insurance. This is very, very important because when you get in a home or duplex or triplex or mortgage, you need all of these. Now, I want to get a little technical. Then we have what we call mortgage guarantee insurance. So you only could borrow up to central bank requirements. Central bank, now it might have changed, but I know all my life it's been 75% of the value. Okay, so 75% of the 300,000, somebody could calculate that for me and they could let me know. 75% of 300,000. So if you calculate that, what do you get? 75% of 300,000. 225. So let's say the value of the house is 300,000. Central bank require that the bank only do the financing for 225,000. So you're like, but where am I going to get the rest? Right here in the MGI. And so this is how the insurance company make some of their monies. So the difference between the 225 and the 300,000 is $75,000. And so what they will do a coverage between the two amounts and cover the difference. So if they lose, then that cover them. So they have insurance who cover insurances. And so if there's a loss, they will go back to the company and say, okay, I'm only able to get this amount when I sell. This is the mortgage guarantee insurance, pay me the difference. So they're always covering themselves. Okay, I'm gonna go back up now. Okay, I think we covered that. Okay, so I saved the best for last. The best for last. It's like good coffee, okay? VAT. Somebody can tell me what's VAT? Other than value added tax? Okay. Okay, VAT is a paid, and I'm so happy that they took VAT off of food. VAT should have never been on food and water in the first place. Okay, so VAT, value added tax. The government of the Bahamas, well, they've changed it. VAT was since 2015, okay? But before VAT was stamp tax. Now they're all used interchangeably right now when it relates to mortgages, okay? And so before 2015, the government used to charge stamp duty on all mortgages or conveyances, and I'll explain it a little bit, okay? And I'll explain what is deed, I'll explain what is, did I miss that? Okay, it's probably coming up soon. What I'll explain was deed, and I'll explain what is conveyance, okay? And so value-added tax, 2015, before 2015, the government waived value-added tax or stamp duty if you are purchasing for the very first time. Now, I don't know which government started it, but I was just happy that it started. Because if you want to purchase that same $300,000, you would have to pay government, and I have on there the different stamp rate also. You would have to pay the government, well, the 300 thing, I think, attract 4%. When you do that mortgage, you have to pay VAT also. But if you have never signed with anybody, and let me do a caution right here, because working in industry, we have person began to feel sorry for their family members, other persons, and you know what they do? Because they didn't get advice, they sign with their mom, they sign with their dad. And let me warn you now. If you sign with your mom and dad and you can't, because they couldn't qualify, a little later when you get married, then that's going to affect your borrowing. Be very, very careful who you sign with. Because now you married and your mommy living in her house, but you can't get a mortgage or you can't qualify because you signed with your mom. And that is a long term because it's 20 years and some mortgages go for 30 years. So be very, very careful who you sign with. I have a question before the question. All right.
So then, who would you recommend to sign with?
Well, I'm going to get into that. But so I'm talking about before you get married. If you're getting married, you should not, or you plan to get married, you should take very, 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 lots of thought before you sign with your mom or your dad or with your cousin or your brother, because it affects not only your credit rating if the person don't want to pay, but also banks look at what other loans you have and you may say, oh, but that's not my loan. Oh, yes, it is. They consider that your loan. So when they do the calculation, they'll see that, okay, they'll minus, if you sign with your brother, whatever your brother pays, and they will add that. Remember we talked about 50, 30, and 20% rule? That will be a part of it. And so you might not be qualified. I've seen so many persons who came to my office and cried because they didn't get the right advice. I'm saying that to you because you don't know, now you do. And not that you don't love your parents or your brother or your sister. You just say, I can't do that because I'm thinking future when I get married, I wouldn't be able to get a mortgage. Okay? You'll pay me later for that. Okay? So let's talk about VAT. Okay. I'm going up. I'm sorry. Get used to this. All right. So what VAT is the government empowering buyers through their incentives. So it is really an incentive. So value-added tax, 2015 was the first time VAT was introduced. And so really it's a broad scheme of things for the government to apply to all goods of services. But for our purpose, for the mortgage purpose, first-time homeowners are totally exempt from VAT. And the good news, up to now, the minister, I think, Helkitas, in January, I didn't see, I looked for it, I couldn't find it, but in January he was on ZNS and he stated that not only they are exempt, but also up to $600,000 in exemption. Now that's good news, beautiful news. You know what it is for don't have to pay any VAT on homes? Okay, so let's get down to it. So now, for first-time homeowners, what you'll need to qualify to get your exemption is conveyance. And we're going to get into conveyance too. Mortgage instrument, which comes from the bank. And then, now, this relates to acquisition for first-time dwelling only. You can't fool the government, because if you fool the government and you're not a first-time homeowner, there's a fee, and also you may even be able to go to jail for fraud, okay? So there's full exemption, or what we call zero rating exemption, or partial exemption. And I'll talk about partial exemption in a minute also. Okay, so who's eligible any Bahamian, you carrying a Bahamian passport, you are eligible for exemption from the Bahamas government. Okay? Now, I have 18 years. That's the legal age in the Bahamas. You cannot do any business with children, and that's why children, that's why I don't want to get into that. Anyway, legal age for children is under 18. So anybody over 18, you could get a loan. Now, so let's talk about, I want to stick a pin right there too. Some people have money, but they don't want to spend their money. So you could still get a mortgage and you could still have your money. So what you do, you tell them you want your funds to be held or for the mortgage. So at the end of the day, you have your mortgage and you have your fund. But understand that your money will be tied up. Okay? If you say, I'm not good, I don't need this money for 20 years, just let it rip. And so the bank will also hold, you could say, let the house be free, but hold my cash. So there are different ways of purchasing. Now, this is just the application process. This is the same thing. This is the application process for a mortgage. What you need, gather all your documents. Passport. They would not accept no driver's license. You need your passport. Okay? And then, as realtors, what we give you, what we call a letter of intent. Now, the letter of intent does not obligate anyone, but really what it does is it is an instruction to the attorney saying, hey, these two parties agree on the rate, they agree on the VAT, they agree on the down payment, they agree on the term. And so that's what the letter of intent is. Then you submit these application, wait approval, make sure you have your down payment, and then that's for both the bank and the government. Then you apply for exemption or apply for the mortgage. Any question before I go on?
So I have a question back, when you said about holding the money. How would that come to play, let's say if the value of money changes in the sense that, like time value?
Okay.
Because the banks or whoever you're loaning the money from, they would never lose.
No.
So how would that affect the client in that case?
Well, that's a very, very good question. So, because if you just want to hold your money, you say, I'm going to save my money for retirement, you're losing money because you're not getting any interest. People say nowadays you might as well put your money under the mattress, but that's not safe either, right? Put it in the security box. That's not safe either, okay? But you can put it in a safety deposit box in the bank, but you're not getting anything. So now I'm like the millennials, okay? I am a crypto queen. I like do my research. And so if you don't want to do that, you go do other investments like crypto, stocks, and different avenues to make money. I believe in multiple streams of income, okay? You might be working here, but what are you doing after 5? What are you doing after 6? Learn crypto. We go in, and I'm glad y'all in the digital space. It's all about content and everything. But in the digital space, you need to know about cryptocurrency. That's the wave for the future. It's not that kind of money. It's not going to be paper money and quicker than you think. A lot of people are going to be caught, and I'm getting off track, but a lot of people are going to be caught off guard because it's so critical right now. As a matter of fact, they have what they call a Clarity Act supposed to get passed. It was supposed to be passed in March, I think. It might get passed this month, and all the Clarity Act is this. What it is this. It gives the financial institution a chance also to buy cryptocurrency. And when that happens, it's all over. Meaning that the cryptocurrency, they're not allowed to invest right now because it's too up and down, because they make an investment, it's too risky. But when it becomes a no risk and the bank can hold it, then the banks will hold that instead of cash. And so that may be that's a problem because a lot of people are not aware of this document that's supposed to be signed. Once it's signed by the U.S., it began to trickle down into other countries. And so that will be definitely, and just a one-off so that you'll get into the crypto space also, and investment. It don't take much to invest, $100. Now remember, I'm coming from a financial background. I like to advise people of, getting monies and making their wealth work for them. And so you could put aside $100 every month and buy cryptocurrency, buy stocks, buy bonds, okay? All right, back on track. So what is a conveyance? I'm so glad you asked. So a conveyance is a deed of conveyance is an assignment. These are the different things. Now there's about 9, but I give you the ones that are used mostly for mortgage. So a deed of conveyance is what the bank will use when, or the attorney will use when you get a mortgage for that property. And then there's an assignment. Somebody could give you, upon their death or different things, they assign the property to you. That's why it's called an assignment. And then transfer of real estate. Somebody, while they're living, they could say, you know what, what's her name? Said, you know what, your granddad said, you know what, while I'm still living, I am going to transfer my property to Travana. Now, there's a different price for that also, transfer. But because you're a first-time homeowner, it is waived. Okay, in the U.S. or Trump and the rest of them, they go after that. You just transfer just like that. They're going to charge you for that. Okay, then there's a deed of gift. Somebody just give you a gift. And the gift could be left in a will. Most of the time it's in a will. Okay, so that's what a conveyance. Any question on conveyance? Mm-hmm.
What's the difference between a transfer and a gift?
Okay, because most of the time your granddad tell you. It could still be a gift, but they transfer it over in your name. He signs, you sign. So there's a transference from him to you. Now, most of the time, the gift, they don't even know there's a gift. When you receive a gift, do you know you're getting a gift? No. Okay, so that's the difference. The difference is you didn't know. Okay, so it's left most of the time in a will. Okay, so that's the only basic difference, that you do know about the transferring, and the next one is just a gift. All right, so this is a deed. A deed is a legal document. I stress legal document, and it proves ownership, okay, in a real estate assets, and enable transfer from one person to the next. It's a formal written document, and such as a quitclaim, that's in the trust. The trust uses a different way of transferring properties. With a trust, you don't have to wait for, if your parents die, you don't have to wait to go to the court. You could begin to operate the next day, within the next hour. That's the difference between a deed from the bank and a trust, a will and a trust. So the trust, operate right away. Will, you have to go through the court. You have to get it probated. I know I said a lot of stuff right now, but it'll come back a little later when you start to get your mortgage. I love DINKs. You want to know what is DINK? Anybody want to know what is DINK? Double income, no kids. Okay? DINKs, now, individual and couples can apply for loan, but DINKs, when you have no children yet, I'm saying don't have no children, I'm just saying take your time, because with the double income and no kids, you could rack up some credit, okay? With 2% qualifying for a loan, you get more. Basically, that's what I'm saying. It's better with 2 than with 1. Because 1 person, the qualifying criteria is, you don't get as much, so to speak. But when with 2 persons, say, with that same person, okay, remember I said $1,016 would have been for that $300,000 loan at 4.5. I didn't say I calculate some down payment in there, okay, for that to be $1,600. The larger the down payment, the less the payment. So if you have money, I know you don't want to hold on to money, reduce it. And when you get a mortgage, understand that some company in their agreement, their mortgage agreement, will put that you cannot pay off the mortgage probably within 5 years, within 10 years. You have to read the fine print. Don't be too excited to get the mortgage. Read it, because some companies allow you to go straight to the end without paying. I don't think any in the Bahamas. But I'm saying for the first part, 3, 4, 5, sometime up to 10 years, you can't make additional payment. So you want to ask, can I make additional payment? Okay? And when can I make the additional payment? And why did I say that? Because when you make additional payment, every time you make additional payment, you're reducing the interest. You saw the interest there. Every time, because mortgage is calculated on the outstanding balance. Now, if you're using 5%, if you only have $300,000 versus 350, the 5% will be less, correct? Because it's calculating it on the outstanding balance. So the more you put down, the less you pay, the less interest you pay. Okay, now ask me if I did that. No. Okay, I didn't do that. So, but now that you have information, you could do that when you get extra monies. If you have extra jobs, take your monies and put it. Now, when I say put it on the mortgage, apply it directly to the principal. That's important. Not on the interest, to the principal. You make an extra principal payment. Okay, so that's the question you need to ask. Can I reduce my principal payment while I have this mortgage? And when can I do it? Okay, now we talk about exemption. So the government exemption, like I said, is the initiative, all right? It helps with VAT relief. And let me go back. It applies to transfers and mortgages. Okay, remember talking to your grandfather. If your grandfather transfer it to you, and you say, okay, I never had a mortgage before, but I do have a property. So you want to purchase other things because you have that mortgage, and because it's your first time, even though you have a asset, not mortgage, even though you have an asset, you could still go and apply for a mortgage. And the government is obligated to minus or reduce or exempt you from value added tax when you get a mortgage, even though you have assets. That's very, very important, because some people, their parents might have left them with a home, but you never had a mortgage before. All right? But you could apply it too, because if they transfer in sometimes, if it's your first time, being transferred by your grandfather, if your grandfather is not paying for it, then they may say, okay, well, you have to pay. But in that transfer, you said, okay, well, I'm going to use my VAT exemption. Okay? Okay, we're going to talk about who qualifies. All right. So what are the property limit? It must not exceed $500,000. Remember I told you, Helkitas talked about January, that you could go up to $600,000, but I didn't see it on the books yet. Not too sure if they've not reflected yet in land revenue, but I could not find it. So I put both, that you could go up to $500,000 for the exemption. Now, the exemption, you get an exemption on a conveyance and mortgage. And so let me explain that. The exemption on the conveyance is, remember that's a document, would be said, that it's a deed, eh? That's a deed of conveyance that transfer it in your name. That's the legal document. But mortgage is another thing. A lot of people don't realize that. All right, so mortgage, the government also charges the banks VAT. So once you go into your loan officer, your mortgage officer, you say, listen, I'm doing this as a first-time home owner. So that will be considered. Because if not, they will charge you and the government will get paid and you didn't even know. That's money in your pocket. So on the deed, that's the transfer into your name, and the mortgage. So you have to make sure you're very knowledgeable, because you're going to end up paying government money when you didn't have to. This is how the rich people make it. Ask Trump, right? Trump never paid one VAT probably in his life. because he knew the loophole. But this is not a loophole. This is what the government has in place. All right? So when you do that, you have to apply to land. You could apply through VAT, inland revenue, but for the most part, the attorneys take care of that. So this is what I was going to ask you, the types of property. So there's land. Some people purchase land, just raw land with nothing on it, and then later they said they're going to build on it. Then a single family home. So single family homes are anything that's not duplex or triplex, okay? Then is condominiums or townhouses. The difference between condominium and a townhouse is that a townhouse is different levels, about 2 or 3 levels, okay? You go up the stairs. Condominium is flat. Now you could have condominium and complex, but in that complex, you don't go up the stairs. It's not a townhouse. It's condominium, okay? So duplex, everybody know what is duplex? 2 units that you can rent or you could occupy it. Now, I want to say one thing here. Recently, the government also approved, they used to charge, okay, so if you buy a duplex, they will charge you for the next side because you're not what they call owner occupied. So if you own one side, they will charge you 50% of whatever the VAT was. All right? But now the toll thing is exempted. So they charge 0 if it's a duplex and you live in it. But you have to live in it. You can't buy it and then go live with your mom or your dad or get married and go live with your husband, okay, or your wife, all right? So it has to be occupied by you to be exempted. And of course, they're going to try to prove that too. All right, so we talk about 0, let's talk about 0 VAT exemption. So this is what you need. And the attorney will ask you to get that if you don't apply through VAT. I helped my son so much, he's happy with me now. Remember, during the mortgage process, we ain't row about 5, 6 times, we ain't row at all, okay? And then after I told him about the VAT, and I said, okay, let the attorney apply, he didn't have to pay any VAT, okay? No VAT. So he was happy with that. Any money coming in his pocket, he's happy. Most men like that, okay? Most men like that, all right? We as women, we don't mind having the monies to spend, but the men want to hold the money because they're protectors, right? They're protectors, so they're looking out for the next thing, how to protect the family, making sure the family have money. But God didn't wire us like that. Some women are like that, but yeah, God didn't wire most women like that, okay? So you have to get your ID, and like I said, it has to be passport and national insurance card. Then you have to have proof of sales agreement. So remember we talked about letter of intent. So after the letter of intent, which is produced by the realtors, it goes to an attorney. The attorney takes everything from that letter of intent, all of the intent, the agreement between the two, and they put it in a sales agreement. And that sales agreement is signed by both parties, and that is what you have to produce to Inland Revenue, a copy of the sales agreement, proof that you've purchased, okay? Then the mortgage docs. So when you get the mortgage, you sign off on something. They'll give you a copy of that. You'll have to take that copy also to Inland Revenue. I'm just saying this just in case you decide to do it yourself. Because I know in the past, what they used to do is they applied afterwards for it. Now you have to pay your VAT, then you get it back. That didn't make any sense. So now you just upfront say, I'm not paying. So if you have to do that while, I don't know what the different banks offer. So if you have to do that, these are all the things you need to do if you don't get your attorney. You get your attorney involved, you have to still pay, okay? Now, VAT rate. So if you're getting a mortgage, remember we talking about $300,000, that would have cost you 6%. Somebody could do the 6% calculation. Let me see what you had to pay. This is why this is so great and beautiful. 6% taken off your mortgage or conveyance, and you don't have to pay anything. Who's doing it? Say it louder. $18,000 you don't have to save. Okay? And so that is Excellent. Because now we talk about, when we talk about zero rate VAT. Anybody seeing it on the screen? Okay, so let's say, for example, you get a mortgage, but the government only go up to 600,000, but the house costs 700,000, eh? So from the 600,000 to the 700,000, which is 100,000, you have to pay VAT on that excess amount. You understand that? Okay, so from 5 to 6, because it's approved now for 600,000. Like I said, I don't see it on the books yet, but that's what he said. So up to 600,000, you get VAT free. Anything over that, the difference between the 600 and the 700,000, if you've got a mortgage for that, you pay that rate. Okay, and I intentionally put it all there so you could see all the different VAT rates, because it might not apply to you. Any non-Bahamian have to pay 10%. Why is that important to you? Very important. And I don't want to prejudice somebody who's not a Bahamian, but that will be calculated in if you're marrying somebody who's a foreigner. So it would be best if you could qualify by yourself, because the government is going to find some way to charge that 10% or a portion of that 10%. Okay? So if you're marrying somebody who's a foreigner, they're going to charge you. But if you're a foreigner and you're getting a loan or mortgage, it's outright 10%, no 2%, 6%, or 8%, or even 9%. It's just 10%, even if it's just 100,000. I guess that's the way of the government financing themselves, if you want it that bad. But that's still easy, because I watch a lot of U.S. news. Trump said, if you want to be a U.S. citizen, pay me $5 million. I'm like, for what? I don't even have nothing yet. $5 million, and you could be a U.S. resident. Now, before, if you got a mortgage, you could have probably become a U.S. citizen. It depends on the amount. Now, Bahamians, foreigners can become resident also, but they have to spend $1.5 million here in the Bahamas. With Trump, you ain't spending nothing yet, and it's $5 million. So stay in the Bahamas, eh? And I think I'm done. And my time is up. Amen. So thank you very much. I really appreciate talking to you. Any questions before I leave? Because my time is gone.
I think I have a bunch of questions, but
Okay. Time is gone, right?
no, I'm gonna ask them. Anybody wanna go first or?
So you were talking about paying more on the mortgage. You know, like you pay more on the
Yes,
principal.
although the
I know
principal.
some people have advised that they almost penalize you if you pay more.
Yes, that's what I was saying. They penalize you, and so they penalize you sometimes with the time. They say you cannot pay it before 3 years. You cannot pay it before 5 years. So you have to read your mortgage document to see what's in there. Don't just sign the mortgage document. Read all the fine print. Why? Because I was a mortgage manager myself. Okay, and I used to explain it to them, but they're so happy to get the mortgage. Then a little later they come back and say, oh, I said, I explained this to you. These are legal documents. There's nothing we could change.
The last question. I know you said do your own research about the rates at the various banks, but
Right.
in your opinion, who do you think have the best rates?
Well, I have not done any research, but most of them are under 5 right now. Now, duplex, they might change it based on, because they know you're going to be getting some income, they may change it based on what you're getting, okay, which is duplex or triplex. Like, remember I said, anything over 3 units is commercial. So they could tear their rate based on that. But for homes, you could check. I think 4.5%, 5%, 6%. I don't think even it goes as far as 6. It is so great right now to get a mortgage. Okay? So before anybody asks a question, I remember you have to save. Please save. I've spoken to one of the bankers, and they said that the biggest problem with millennials and Gen Z is they don't have the down payment. And so qualifying is very hard if you're not saving. So like I said, if you just put $100 a week, a month toward savings, toward the future, you will be in a good position. And we talk a little bit about, and I will go back to it, talk a little bit about the 20-30 rule, right? 50-30-20 rule, okay? And some of that, the 20%, in that 20%, make sure save. If you could save 5%, you go up a little higher, 8 or 10% of your salary. Don't touch. There's this book I read, it's called The Richest Man in Babylon. You read it? Okay, the richest man in Babylon says, do not touch 10%. Act as though it don't even exist. Just pay yourself. We call it pay yourself. Pay yourself. Send it to your account. Act as though you only, if you're getting paid $1,000, send $100. And act as though you're only getting $900 a month. This is how you do it, okay? And so I advise that because I love the idea of paying yourself first. I love the idea that you can just put aside money every month. It is said, well, nowadays, all you do is set it in the system and forget it. Automatic transfer. Do the automatic transfer. So when you set up your system, Scotia, First Caribbean, wherever it is, do automatic transfer. Let it come out a certain time every month and act as though you only have a certain amount to spend. Sometimes you have to trick your own brain. So somebody else have another question.
On the topic of duplexes or commercial properties, when you're applying for a mortgage, does the bank factor in the income that will be coming in?
Yes, they
to
do.
Goes into the loan amount?
Yes, they do, but not the full amount.
Okay.
They do a portion from bank to bank. It depends on on which bank. So they do factor in a percentage of that amount, not the full amount. Let's say if it's $1,200, they may say $800, because there's maintenance and different things that you have to attend to.
I got a question, and I think it's something. So, one of the things that I recognize a lot is that some people don't even understand why you should use a real estate agent when you're talking about, ownership.
Yes.
So talk a little bit as to why it's important and what they should look for when they actually look at the
First, I want to say, you're not even paying the realtor. It's the seller paying the realtor. So why not go through the realtors? First of all, we have access to all of the listing and the multi-listing system. Let us do the work for you. You tell them this is the range, this is the area. Sometimes, you know how Bahamians go. Every Bahamian, every Nasuvian want to live out west. Okay? But west is overpriced. Okay? Overpriced, and you're not getting the value. And so let the realtors do their job, because you're not even paying. I can't understand why people would not use a realtor when it's the person who is selling has to pay the realtors. So the sellers pay the realtors, not the buyers. Okay, so that's one thing. Then the other thing is they are expert in the industry. We've had situations where people would have gone and put monies in the hands of the owners or the sellers. And I have countless stories of persons who have been ripped off by, so just say, okay, you connect, you say, I'm gonna go straight to the seller. Not that all sellers are bad, but they get messed up because you didn't go through the realtor and you didn't use an attorney. Okay, so never put monies in hand of anybody other than your attorney. Never. Okay, then watch some of them attorneys too. Make sure you get your receipt. Okay?
Okay. First off, my question is, what areas do you think is best to start looking for real estate around, etc., especially in the Bahamas where we deal with things like flooding, hurricane, because insurance purposes,
Right.
like that. Like, what do you think, or which subdivisions or something like that?
I was one I built 3 times, so I know. When you're looking for a property, wait until it rains. And you go right after the rain, see if water settles. Then if it's a raw land, walk the land, even through the bush. Go through the bush, check, see if there are holes, because you might say water might be a problem, but sometimes there are caves. There are big holes, and you'll have to fill those holes. And I'm talking about big holes in that property. And you don't see it until after. You get so excited. Oh, it's getting land. You don't know that the person is selling you junk. So that's one of the things. So you wait until it rains. Go and check the land right after the rain. If it rained that last night, go drive by and then check it out. And then, like I said, make sure that you walk the land. Walk the land and make sure that there's no hole in the land. Take somebody with you, of course, especially ladies, take somebody with you. Take your cutlass too. Chop down some stuff as you go through, because the stuff get in the way as you do. So walk the land is very, very important. And so these are just two of the things that you can do to make sure that you're buying the right property. Now, in terms of the document, the lawyers do that part. When it comes to a document, the lawyers always look for what they call a good root. A good root is 30 years, meaning 30 years it's been on the books, 30 years somebody else purchased it, and so it's 30 years is a good root. And if you want to always ask the person, say, can I see your document? Can I see your conveyance? We're talking about deed. Can I see your conveyance? So you always minus, okay, they signed a conveyance, 1986? Oh, that's good. All right, it's a good route because the attorney can now do the research. Okay? I hope that helped you a little bit. I don't get in all of it. Yeah.
Okay, I have one last question. Us as first-time home buyers, do you feel like it's better for us to buy pre-built homes, like based off like the Bahamian, I guess, architecture and everything?
Right.
Because I know some homes are way outdated and stuff need a lot of work. Or do you feel as though it's better for us to build?
Well, that depends, because some people have access to contractors. Your dad may be a contractor. You may say, I'll buy the land. Your dad say, I'll just do it almost free. So that's a plus if you know a person or family members who are contractors. And then number two, when you want to buy, you got to make sure, what is it made of? What type of material? Maybe the materials, the government approving stuff these days, you have to be careful. The people bringing stuff in from China. I read, I think about 4 or 5 months ago, in Europe, they brought stuff in from China, and what they didn't tell them was it was not fire retardant.
Yeah, I already sent.
The whole complex burned down and killed about 30 to 50 persons. I didn't follow up, so it could have been more, because at that time when I read it, it was 30 persons died. It was not fire retardant, meaning no protection from fire, and the fire disintegrate everything was burnt up. And this was like I don't remember. I know it was a lot of floors. It was a lot of floors. And so now the government of the UK, they're looking into it to see who was at fault. Was it the contractor who brought it in? What was the significance of the fire? But they know for sure it was materials that were brought in from China, and so people lost their lives. So I'll say, watch the material also. What are the materials made from? I can't give advice on what to get, but like I said, you might only be able to qualify for land at the moment. If somebody's selling you a piece of land, buy it for now. But the only bad thing about buying the land is if you buy a land for $100,000, the government say the VAT go up to $600,000, you just lost $500,000. I don't like to take that kind of loss. You know what I mean? For me, so you only use $100,000 of that exemption. So that's the only bad part. But land could go up in value. It depends on where you're buying it. Land has gone up in value so much, it's very hard even for millennials and Gen Z to qualify. I have a listing right now, and I hate to put it out because I feel like I'm going to be so bombarded with calls. I said I'm going to hold it as a pocket listing because I know the amount of calls I'm going to get, because most Gen Z, because of Gen Z and millennials, are not qualifying because the prices are so high for houses and homes. So that's why I say start now. The more you put down, the more you'll able to qualify for. Okay, I hope that answered your other question. I can't get into all the details. I've just given a couple points.
When it comes to fact, is it a situation that is true between the seller or just the buyer? Sorry, so before you answer that, this will be the last question. We have Suzette's contact, if you need to get Suzette.
Yes, please. Do you have a card?
So you can ask a question, but just so understand that, so if you need to get additional questions, Suzette, you have some of your cards, right?
I think I brought some. I think I brought some. I think I brought some.
All right, so you got it.
Just the part situation, is it like a split between buyer and seller or just the buyer?
Okay, so very good question. So VAT is normally half and half. But in the letter of intent, some people agree. For example, I did a deal and the person said, listen, I want a certain amount in my hand. In other words, when they say I want a certain amount in their hand, that person's going to take and carry all the other bills. Okay, whatever that bill is, if you want 845, the realtor began to work on the VAT. You say you have to pay VAT, you have to pay the realtor, you have to pay the legal fees, and all the government's other taxes. You know, there's recording fee and different things, okay? And so we have to begin to work backward and get to that amount that the seller wants, okay? And so, yes and no. Yes, one person could pay it. It depends on the agreement. But for the most case, it's half and half. So it's half, you pay the VAT. So your half, so if you're getting 300,000, your half will be exempted. The seller already bought, because they have a home, obviously, right? They will not be exempted. Only the first time on, so your half will be totally exempted. That answer your question? Okay, well, thank you very much. It was glad. I was happy to be here. I have, sorry, I have to go. You can shut it down. So, anybody could guess my age. I have a gift. And if you're wrong, you're not going to get it. If you guess my age, you get a gift. Mother's Day gift or I call it pre-Mother's Day. If you're not a mother, it's okay. Potential Mother Day gift. Anybody can guess my age. I just want to give away something. Okay.
I know, right?
Just say something. Say something. Even if it's flattery.
I feel like you're very wise. So like, y'all could go first.
Come on. Okay, everybody, you say something. If it's flattery, listen, I'm telling you, just say something.
I feel like you're in their 50s or
Okay.
Probably say like 36.
Okay. 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 Okay.
But going based off of you talking about your son
Mm-hmm.
and his experience, I would say like early mid-50s.
Okay. So guess what? Flatter wins. It goes to him. He has to give it to his mother. I am 40 for the time. Okay. Just one more question. Who could give me 4? I have one more gift to give away. Who could give me 4 things you need to do to qualify for a mortgage? First hand that goes up. Okay. Give me 3 or 4. Okay. Yeah. No. Go ahead. Okay. All right. Let me ask another question. Give me 2 or 3 things that could be is the same thing as a deed of conveyance, or one other thing that's considered a deed. Deed have different names.
Is it
No.
Q?
No, that's the process.
Oh.
a transfer, a deed of gift,
Deed of gift.
a transfer.
Transference. Yes. Okay. She give her a hand. All right. Thank you very much.